Welcome back. Jared Blikre is standing by for us down at the New York Stock Exchange. Jared.
That's right. I'm looking at the S&P 500. 24 hours ago, I was saying we are at critical support, at least in the short term, and we are still exactly there. So the NASDAQ has been fluctuating between the red and the green, oscillating around the unchanged, and the Dow and the S&P still marginally in the green. It is Tuesday, so we look for the potential for turnaround Tuesday, mitigating yesterday's minor losses during the first hour of trading. See if that sets the direction for the rest of the week. Also checking in on the VIX. Looks like the VIX is about flat right now, so not much going on there, but I want to turn to the bond market because the 30-year, let me show you this. Let me show you our quote screen. It hit 3%. That is a big round number. Have not seen that in 3 years. And you'd have to go back to 2019, way before the pandemic, to see anything close to these levels, as you can see here on your screen. Also checking out the US dollar index. That is creeping higher here. And you put all this together, this is weighing on those growth stocks, it's weighing on the mega caps. And interestingly, I was just talking about the 30-year rate. Well, that means increased mortgage rates. Nevertheless, real estate, the #1 sector, up about 0.9% today. So interesting to track that. Industrials, healthcare, and consumer discretionary, all those are outperforming. So are financials, utilities, and staples. So kind of a mixed bag here. Energy giving back some of yesterday's gains. That is the biggest laggard, but only down about 0.4%. Now looking at some of our leaders, we got home builders in the upper left there. They are the big leaders, up 1.7%, followed by regional banks, retail, that is XRT, also the transports, and a low volatility ETF. To the downside, more negative action for KWEB. That is a Chinese internet ETF. And the negative reports and analyst reports on China just keep coming out with the zero tolerance policy towards COVID, and also their property sector, probably a topic for another day. Their property sector under a lot of water has not been allowed to clear. So all of these factors just weighing on, in general, on these Chinese stocks, guys.
Yeah, it occurs to me we haven't heard the word Evergrande in a little while with mentioning Chinese property. Yeah. Let's talk about other assets as well. I've been watching Bitcoin, of course, sort of hovering around 40,000, but the flip side of that, actual gold, not digital gold. What are we seeing there?
That's right, gold, the other Bitcoin. Don't write letters. Here, that's got to kill them. I know it does. Let's take a look at a year-to-date chart of gold, and we hit $2,000 an ounce, or came very close to it only yesterday. We are backing off that big level right here, but let me just show you a 10-year chart of gold. This is going to exceed the prior peak that we saw in 2013. Gold has been basically basing for several years here. Now, the long-term trend, the secular trend, is up right now. We can see that's a multi-year basis. If it breaks to the upside here, if it starts trading above 2,000 and holding, probably going to surge to at least 2,500. That's just another big round number. But when you have these long consolidations, you finally get a move up, and you want to make sure there's continuation. You want to make sure it's not a false move to the upside, but usually these do get resolved in the original direction of the long-term or secular trend. So that is up right now. So gold, definitely something to keep an eye on here.
Yeah, most definitely. Interesting stuff. Thanks, Jared. Appreciate it.